Buying a home is one of the biggest financial decisions you'll ever make, and timing it can feel like trying to predict the future. If you've already saved enough for a 3.5% down payment, commonly associated with FHA loans, you might be wondering, should I buy now or wait until 2027? Should you wait to buy a house in 2027 if you already have a 3.5% down payment? The answer isn't one size fits all, of course. Let's break down the key factors to help you make a confident decision.
What a 3.5% down payment really means. Having a 3.5% down payment puts you in a strong position to enter the market sooner rather than later. This level of savings typically qualifies you for FHA loans, more flexible credit requirements, lower upfront cash barrier, faster path to homeownership. But it also comes with trade-offs: higher monthly payments compared to larger down payments, mortgage insurance premiums, or MIP, less initial equity in your home. So the real question becomes, is entering the market now worth those trade-offs? The biggest wild card is the interest rate. Mortgage rates are one of the most important factors in your decisions. Waiting could mean a lower monthly payment and more affordability. If rates stay high or rise, buying now might lock in a better deal. Here's the catch. Waiting based purely on rate speculation is risky. A smarter mindset: buy when you can afford the payment comfortably, not when you think you've timed the market. Home prices either likely up, not down. Historically, home prices tend to rise over time, even if there are short-term dips. If you wait until next year, you may face higher purchase price. Your 3.5% down payment may cover less of the total cost. You could be priced out of certain areas. On the flip side, a market correction could create opportunities, but those are hard to predict and often short-lived. The cost of waiting. Waiting isn't free, so consider what you might be losing. Rent payments. Money that doesn't build equity. Missed appreciation. Your future home could increase in value while you wait. Delayed equity growth. The sooner you buy, the sooner you start building wealth.
Even modest homes' appreciation over 2 to 3 years can outweigh the benefits of waiting for slightly better conditions. Flexibility. You're not locked in forever. One common fear is buying now and missing out on better conditions later. But remember,
you can refinance if interest rates drop. You can upgrade later as your income grows. You gain equity over time that can be leveraged. Buying now doesn't mean you're stuck. It means you're getting started. When waiting might make sense, there are situations where waiting until next year could be the better move. Your income is expected to increase significantly. You're working on improving your credit score. You want to save for a larger down payment to avoid mortgage insurance. You're unsure about your job or location stability. In these cases, waiting is less about market timing and more about personal readiness. When buying now might be smarter, you might consider buying now if you have a stable income and employment. You can comfortably afford the monthly payment. You plan to stay in the home for at least 5 to 7 years or more. You're tired of renting and want to build equity.
if you already have a 3.5% down payment saved, you're in a great position. The decision to wait until 2027 shouldn't be based on trying to outguess the market. It should be based on your financial stability, goals, and readiness.
The bottom line: if you're financially ready now, buying sooner could help you build wealth earlier. If you need more stability or savings, waiting is a strategic choice, not a missed opportunity. If you would like to know what your current income could qualify for, and would like to get more information, or to find out an alternative approach to home affordability, please contact me by setting up a free consultation. I've added the link in the description box below. Let's be friends on social media. Like, subscribe, follow, and say hello. Thanks for watching.